Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the Dow Jones. And look, the basic point is that the price is coming down into the 13,000 here, so there's going to be support there, so we can expect a bounce to occur there. This will be reflected within the S&P 500 as well, and also in other markets as well. So this is the retest of the 13,100 here. If that fails there, well then we'll see that move down through to here. But we can expect a bounce off here. We can see the buyers coming in already, basically. So because normally if something is coming down through here, it would find resistance under the midpoint and then move down through here. So yeah, look, there'll be buyers there, and that will be the same with the S&P 500 as well. We picked out the 1410 as a strong support, and also the 1400 as well. However, we do expect further downside through the S&P 500, so a move through here. But just to let you know that, you can see here that the trend was strong through here, and the length of the trend as well, and then it's shorter in here, and then the consolidation is bigger as well. So basically what it's doing is it's moving down, it's slowing down. So just be mindful of that. Yes, it is edging lower, but it is slowing at the same time as well. So what you see here is not what, when you're looking at a trend as such or anything in the market, you always get the opposite. If you're looking at a trend, then you'll get a correction. If you're looking at a correction, then you'll get a trend. So you always get the opposite in the markets. And it's the same sort of pattern on the lows for the European markets as well. This particular pattern here is in three waves. It's quite a nice A, B, C, actually, an A and a B and a C wave here. So we should see that take out a new low through here. But we know that the 5772 here, when you get 772 or 272, it becomes a stronger number. So we can expect that to play out there as well. The Australian market is as you know, is quite chirpy in relation to what other markets around the globe are doing. But once again, this pattern here is also the same as the European markets as well. So we've got that A, that B, and that C wave coming up through here. So that three-wave structure is a corrective move. So new lows would likely to be made. These are corrective structures as well. That A, B, and C there. The same as this A, B, and C here. The same as this A, B, and C here. So they're corrective moves. So it is edging down, but it's edging down in a reluctant sort of manner. So, and it is sticking to the 4,500. If the top of group 1 here develops support here, because that really is the current resistance. The 4,500 is not the resistance yet. If you drew a line through here, you would see that this was the support here, then it's broken through support, and it's come back up and retested it, and it's retesting it again here. So it's retesting the supply here. So until that supply area becomes the support, then this market is in a bearish mode. So be aware of that. But as I mentioned before, there is support in this region over here. So you've got to take that on board. The banks are still reporting, and they'll still be reporting into next week there. So that's kind of supporting the market somewhat. US BHP was up last night. The base metals were reasonably sort of steady, but still heading to the downside. So let's have a look at those. Okay, starting with the US dollar for the commodities here, is that we've been tracking these little 5 waves up through here, and what we've got here, and we'll have a look at this closer later, but we've got this ABC correction through here, the corrective wave through here, so we should be making new highs above this high here, and this would also go for the fact that this move here as well is in an ABC, so we'll have a high over there above the 80.30. So we'd be looking for a high above here, we'd be looking for a high above here, so we'd be looking for a high above, first of all, the 80.20 here, then 80.30. So anywhere between 80.30 and 80.50 would be a reasonable sort of target point for that move up there. But any move up here, of course, will put pressure on indices, commodities, and so forth. So That would be where the extra move in the Dow Jones down to the 13,000 and the S&P 500 below the 1400, and the euro down to 129, and the correction from the Australian dollar at the 104 there unfolding. So yeah, in the copper market here, I just want to normally follow the US market because it's the last closing price. It would have an impact on the market. But the London market here for the copper here, this is the kind of pattern that we're in here at the moment, and it does appear that we've got some sort of triangle pattern occurring here as well, and also a series. Now this has moved down here. This move here is in 3 waves. This move down through here is in 3 waves. This move here is in 3 waves. So a triangle is a bit like that. So, well, that's what a triangle is. So it's basically 5 waves of 1, 2, 3, 4, and then 5 here. So basically an A and a B and a C and a D wave, and then an E wave, and then we go down from that point. So there is a a bearish bias to the copper market. So when we're looking at copper here, this is the triangle pattern. So just coming back into the futures market here a bit. So we've got this little ABC here for the A wave, and then we're down for the B wave in 3 waves. Then we're up for the C wave here in A, B, and C here for the triangle, and then coming down here as well in terms of an A and a B and a C wave here to make the D wave. And in this little C wave coming down here, there'll be 5 waves. So there'll be the 1, the 2, the 3, the 4, and the 5 coming down into this nice support area through here, and then we'll get a bounce back up through here for wave E of 4. And then a move down from that point there. So that's what we're looking at there. The oil market, let me just get this organised here a little bit. So yesterday we were looking for looking at the bounce off the 85 here as a corrective move, and this bounce here is it could be finished. This move here is quite similar to this move here as a corrective move as well. Both wave 4s there. The move on the 85 here is corrective, so it's just a matter of time before this low gets taken out through here. So we're looking for wave 5 of 3 here. Now we're looking for wave 4 here. Wave 4s, as you know, can get complicated, so we may end up with an A and a B and a C wave coming back up to the wave 4 of 1 lesser degree as well. But all in all, we should see one more downside coming in through here, because this is how it counts from the larger picture here. Down for 1 here, back for 2 here, and then we're looking for 2. We're looking for the 3rd wave down, and the 3rd wave will have 5 waves in it. So 1, 2, 3, 4, 5 for the 3rd. The 4th wave here, that can get complicated, but it's very similar to this one here. So I'm thinking we may get away with that. We move straight down from here, but just 5 is the second strongest number, so we have to kind of give it consideration. So we may see more of a sideways pattern across here before we see a move down, but essentially it will follow stock. So once we see the Dow and the S&P 500 moving down, well, then that will follow down. The gold market as well. We've got a little bounce off the 1700 here, as one would expect from here. So this bounce here is developing into 5 waves. So we would have the wave 1, the wave 2 here, and then this would be the structure up here for just the wave 3 here. So a wave 4, if it was coming back, would come back the 38.2% here. So that would basically where it is here, the 1710. So look, if it comes through the 1710 and moves back down, had it down at the 17.6, 17.5 here, but it could go high. If it overlaps the top of wave 1 here, then you've got a corrective pattern. You'd only have 3 waves to the upside, and if that was the case, then you'd be making new lows below the 1700 there. So normally we'd see a bounce off, off a large number here as the 1700 here. Excuse me. It's only natural to see a bounce off off here. And then normally we wait and see if we get 5 waves here or 3 waves. So if we get 5 waves here, as I just mentioned, which will take us up to the 1720, if that was the case. If we get 5 waves here, then we'll get a 3-wave move back, and then we'll get another 5. Because when you're coming in a direction, in any direction, and then you get 5 waves in the opposite direction, because you've got that set of 5 there, it will mean that you'll get another 5. That's the beauty of Elliott in this case. So let's just see how we go with that. And also, when something bounces, it's always good to see what steam's in it. So we've got a bounce here, and you just sort of see it rolling over a little bit. And the same with here, bounce off this group 1 here, coming back up to the midpoint here, and you see it sort of fading at this point. So you would never go along unless you had that number as support, so to speak. So pretty much the same down here as well. That 72 number here, the 1720, will become quite a key number here. It may not look it just yet, but if it's going to move up here, you'll see it develop across that, and you'll be able to use that. But as it stands, it's a bounce off the 1700, and we would need to see, first of all, if we get 5 waves, which would take us to the 1720 area. If we got those 5, well, then we'll get another 5 up there. If it just hangs in there at 3 waves and starts moving down through here, some sort of corrective pattern here, then if it is corrective in the 3-wave structure, then we know that eventually that low will be taken out through there. Okay, let's have a look at the FX. The US dollar here, the important point here, as I mentioned a little bit earlier, but now in a bit more detail, is that we are working across the 80, as you know. From this high point here, we can see a very clear 3-wave structure down through here. So it's only 3 waves until this moves up through here. When this moves up through here and takes out the low of this one here, then it becomes 3 waves, because if this was wave 1 here, that would be wave 2, this would be wave 3 unfolding down through here. But if that comes back up through here into the price territory of wave 1 here, then, well, that would make that corrective at that stage there. So it is a corrective move, and as I mentioned before, that 80-20 should be taken out. This does appear to be a 5-wave structure moving up through here. I can see that sort of the strong part there, so that'd be a little wave 4 here and a little wave 5. So it will probably come up and hit, the supply and the trend line and so forth, and then have some type of ABC correction back here, and then move up from that point there. So bear that in mind, because a small move back here would see stocks rally or find support to some degree in other currencies, and then once that's come back and retested the demand area and starts to move up through there, then obviously that's going to put pressure on the Australian dollar, the S&P 500 and so forth, or euro and so on. So yeah, look, just be aware of that. The euro such, we're looking at there's a couple of ways to count the pattern, but at the end of the day is that it is working across the 130 there. There is strong resistance from a long-term trend line up through here that's really sort of pegging it down there. Could it fail from here? Could the US dollar push up much stronger than we think? Yes, of course. We use the Elliott to give us direction, and when we come to trade, we trade from price. So we need to have that price, the closest largest number, either as support or resistance. But when it comes to corrections, we need to give it a bit of time to work out, to understand what it is. So what we're looking for here is a move back down into the 129 area through here, and give the opportunity for the US dollar to make new highs above the 80-30. The US dollar, as I mentioned yesterday, making sort of new highs, where the euro is reluctant to make new lows here. So it's kind of got that sentiment that there is support here for this market. So we can't really sort of short this market here as such. So on the smaller intraday thing here, yesterday we were looking for a move to come back up and retest the 130 in 3 waves going back up through there, and that's what that's done now. And then we're looking for a move down. Because that was in 3 waves there, then we can expect that to move lower here into around the 129 area there. As you can see here, there's some support here on this trend line through here and the 129. So we're kind of looking for a bounce in this area through here. There's also this longer term trend line coming through here. I need to check that because sometimes it moves on these charts. But, the support is, in this sort of block here. So that's where the volume would be sort of sitting there. So just bear that in mind there. And that's what we're sort of looking for yesterday. We're looking for counting these 5 waves down, the 1, 2, and then counting wave 3, wave 4, wave 5, and then we're looking for some sort of bounce yesterday, and then a move down. Obviously, that's moved higher. It's tricky business, but you can get it reasonably sort of right. So we're looking at a 5-wave structure to come to the downside. Look at, and it may not come a long way down. I can see that's got 1, 2. That's 1, 2, 1, 2, 3, 4, 5, 4 and 5. So look, there's going to be support in this area here somewhere. So just be aware of that as if you're looking to short that to the downside. All right, the Australian dollar, quite interesting because the move up through here. We know that the 104 is a strong resistance. In fact, it's quite a good balance line through. I don't normally see 104 do this that much, but there's quite a nice balance line right through the 104. It's quite a strong price point actually. But what we've got through here, it appears that we have 5 waves in this structure here, so we would be seeing some type of reaction in terms of an A wave and a B wave and a C wave. So we could look at this pulling back 61.8%, which would take us down into the 103 here. About right, yeah, let's just check on that. So that's the little 5 waves. We were counting these up here yesterday and we're looking for 5 waves to be here, but it's extended up through here, so it would be counted as 1 here, 2 to here. And then the 3rd wave is the little 5-wave structure coming up through to here, and the 3rd wave in here, the 3rd of the 3rd would be the strongest and the longest. So that's there, and the 4th and the 5th wave moving up through to here. So we're looking at this is the support here, the 103, and this sort of block here. So we've got this block here of support, and we've got this block here of support as well, as you can see it being tested through here. So this reaction from the 104 here, so far it's in 3 waves down, so an A and a B and a C. So, if that climbs back up on here and then up through here, then that would be the A, B, C here, pulling back 38.2%, which would be fine, and then it would move further up. But we just got to give it a bit of time. If it can't get back up above the 72 here or the 65, then it's likely to come down and give us 5 waves. So that would be the 1, the 2, the 3, the 4, and the 5. Now, if we get those 5 waves there, then we're going to get 3 waves back up, like an A and a B and a C wave. But because we've got 5 waves down in this first length down here, that A, B, and C after that, then we'll get another 5 down, 1, 2, 3, 4, 5, coming back into the 50, 60, into this secondary thing here. And that's what corrections normally do when you have a look at them. They'll come down to the first block, find support buyers, value buyers all coming in, pushing back up, running out of steam, finding supply, and then down into the next block. So, but this is not quite finished yet. If that is going to be, that could be 3 waves down here and still come down into this as well. But just give it some time. If support comes in on the 72, then trade it from that point. Otherwise, allow it to unfold to the downside, and then pick it up from down here. But because we got that 5 waves here, we should see some type of ABC here, a bit larger than this here, because it's a little bit small realistically in terms of this trend here. So it would be nice to see a larger correction in here, and also coming back into the, deeper into the demand area here as such. So yeah, keep an eye out for that A, B, and C correction through here, and then look to move into the long side from that point there. Alrighty, well, that's about it. The futures markets are up a little bit for the SPY. However, the pattern sitting on the 4500 does appear to be corrective, so it could break to the downside, as would the other markets, with the US dollar index pushing to the upside. But as you know, with the US dollar index, it's topping out here shortly. So as it pulls back here a little bit, it will show up as strength on the indices. And then once it's got support here, then it will push up through here. So that short up move in the indices, perhaps in the first part of the session, the Asian session, could be a bit of a false alarm. So don't overtrade. Look to build a trade in by sort of scaling in small positions, and see how the volume comes in at the end of the day for the Friday. If we get a higher closing on stronger volume, then you know that that's going to be some support there that can flow through into the next session. But the Australian markets have been really quite sort of stable while the Dow has been going down. So you can imagine if the Dow does find a little bit of support and edges to the upside, then that's going to be a good excuse for the Australian markets to push up into the banks reporting, the banks reporting next week. So so our market's quite stable and buoyant at that stage. Alrighty, well, good morning and good luck.